Hi everyone, nice to talk to you again. There are four questions after we release our Q4 market outlook. As you can see during this Q3, everything coming down except the interest rate and also the energy price and under the scenario of a very strong US dollar. So the question one is, what is the meaning of diminishing opportunity with high yield stocks with the increasing interest rate? So the argument for owning higher yielding stock during an interest rate upward trend is getting weaker, mainly because of two reasons. The reason one is if anyone buying for the cash income in a period of time, they usually bought a category of stocks usually is more defensive. Example is in the utility sectors. The outperformance of this kind of stocks is already realized. And if you are really buying for recovery, you should buy for the less defensive sector. And the second reason is the other category of higher yielding stocks will have suffered because of the higher interest rate trend. So the profit margin will be decreasing, so it's not so attractive anymore. Q2. What does it mean by REITs or bonds may be of value with stress valuation? When we talk about REITs, real estate investment trusts, usually they have gearing, inherited gearing in order to push up the ROE, return on equity. So when the borrowing cost is going higher, definitely ROE is going down. And also we are talking about the economy, so the risk of stagflation and or even recession. The growth in rent might not be good, prospect in imminent future. So of course, when you talk about single stock, single share investment, idiosyncratic risk is more important than the general sector trend. But overall, it's not very favorable at this moment. So when we talk about the bonds, with possible stagflation, recession, and the interest rates still going up. So overall speaking, we think not all the negative news have been discounted into the current market price. So if you can wait for a very stressed scenario, we call it stress valuation, then I think it would be of good value. Question 3. So elaborate more on the recent ESG trend and what is the reason now is cooling down, or even we see negative outflow in the Q2 for ESG funds. So what an ESG fund investor could do. So what's the reason for selling out the ESG stocks? I mean, obviously, the year-to-date double-digit underperformance against the energy sector, so it's the main cause because it underperformed quite a lot. If the major market dropped 10% and the energy sector up 20%, that means you own the ESG in Q2 will underperform by 30%. So the midterm outlook is also worrying with the energy crisis in Europe due to Russia and Ukraine war is dragging. With global political tensions, unfavorable economic outlook, possible recession, stagflation, conventional energy sectors still have good prospect and relative attractive valuation. What's the possible action? So existing ESG fund investor could examine the portfolio details down to stock level to get a sense about this holdings prospect. With the continued military conflicts, high political tension globally, the accusation among countries on ESG issues is going to increase, especially on the social side like human rights, environmental concern, nuclear energy. It is not yet a strong buy situation. So question 4. Given a lot of money now in time deposit and principal protected products, will investors switch out from safety net and get into risk-taking mode in the coming quarters? Will inflation correlated products still attractive even in next year? So talking about get back into risk taking, 3 points. Smart individual investor will gradually accumulate their target investments during crisis or depressed time. So the parked money will flow back into risk asset in a gradual way. Yet we could see from time to time sudden surge of inflows into investment funds and products, even when the recovery were not realized. Second point, the inflation-related products will remain in fashion for coming year. Yet the long-term inflation hedge assets are still listed equity and good quality properties exposures. Third point, I trust that the investment products provider will equip with various products to fit the appetite of their customers. Therefore, the only work for conscientious investor need to do is homework, research, and total asset management. Wish you all the good luck in investing. Talk to you next time.